entrepreneur, there are 4 important categories to understand for your taxes that you have to deal with. And those are income tax, self-employment tax, payroll tax, and sales tax. Now, although I will be focusing mostly on tax deductions for income tax today, I'm going to cover just briefly these 4 areas just so you're aware of what you need to be looking out for. So obviously income taxes are the main one that people always think about. And just like any other member of the workforce, all self-employed individuals are subject to income taxes. So your federal and state income tax bracket will depend on how much your business makes, along with other personal items that may affect your taxable income, such as capital gains or the child tax credit. Your business income is comprised of all your revenue less your deductible business expenses. So self-employment taxes. In a traditional employment situation, the employer pays a share of Social Security and Medicare taxes that were paid on wages to the employees. However, if you are self-employed, you are essentially responsible for both the employer and employee portion of these taxes. Unfortunately, this means that you are charged double the taxes of an employee in a company. The self-employment tax rate is 15.3% of all income up to the max wage, which increases annually. For 2023, the wage cap is $160,200. 2.9% of all the income that you earn is taxed. This is the Medicare tax. And again, the Social Security tax will be that max cap rate. And again, that will go up every single year. So you can lessen the sting of these taxes by deducting half of the amount of your self-employment tax on your annual tax return. Other payroll taxes may need to be paid. So if your business has employees, you are responsible again for half the Social Security and Medicare taxes that I just discussed for each individual that you employ, as well as unemployment and state payroll taxes. You must also withhold income taxes from their paychecks and make the required deposits to the IRS in order to avoid a trust fund penalty. And of course, if there are state taxes as well, then you will pay to the state agency. These taxes are due on a specific schedule based on the amount of federal tax withheld in the look-back period. And the look-back period is usually from July 1st of one year to June 30th of the next. Very few people can pay annually. Most must pay monthly or with each payroll run. So if you owe $50,000 total federal tax amounts to the government in that look back period, you will be what's called a semi-weekly depositor. And every time you run a paycheck, you will have to pay within a few days. The dates for payments that are due are either Wednesdays or Fridays. If you're a monthly tax depositor, then it's due on the 15th of the month following the month that the payroll taxes were accrued. So January is due February 15th, etc. Now, of course, if the 15th falls on a legal holiday or a weekend, then it is advanced one business day or until the next actual business day. So for instance, if a holiday falls on a Friday and the tax is due on that day, the 15th, obviously Saturday would be 16th, Sunday would be the 17th, so your tax would actually be due on the 18th. Sales tax. You are responsible for collecting sales tax on products that you sell. If you are a brick and mortar store, you're simply observing the tax laws in your area because customers are coming to your location, so you charge the rate of your location. However, if you also sell online, you may need to collect sales tax from the region in which your buyer is purchasing. Rules regarding this taxation vary from state to state. So it's important to understand that the tax amount to collect is based on where the goods are received. So if you're shipping to a customer, be sure to collect the rate for the location that the merchandise will be delivered to. It's also imperative to keep up on the sales tax rate changes. Cities and counties increase their rates periodically when voters approve the change. So keep up with any location in which you sell your products and services. Many also think that they're not responsible for collecting sales tax because they offer a service. But unless a state specifically exempts services, they are also taxable. And what may be non-taxable in one state may be taxable in another. So do your research to make sure that you are in compliance. As an entrepreneur, taxes can seem frustrating and overwhelming. After all, you're accountable for paying proper taxes not only for yourself, but on behalf of your employees and your business. That's a lot of responsibility. However, by understanding the rules of income tax, self-employment tax, payroll taxes, and sales tax, you can ensure that you are paying the proper amount and avoid the headache of an audit or a trust fund penalty from the IRS. The trust fund penalty is a higher penalty because you have withheld amounts from your employees that you're supposed to forward on a schedule. And so that is a higher penalty because it's considered your employees' money, not your own. So knowing your duties as a self-employed taxpayer also brings you peace of mind and keeps your energy where it should be on running your business.